Hi, friends. It's Roland Kim with the Kim Boona team, top 1% real estate team in Greater Vancouver with Keller Williams. Today is January the 18th, and I want to talk to you about what happened in December and the balance of 2023, and then look forward at the factors that are going to impact 2024. As you know, we service the real estate market from Squamish to Chilliwack, and we can help you beyond that as well with our affiliated partners. So for all things real estate, please give us a phone call. I would love to apply for the role of helping you with your real estate needs. All right, let's look at 2023 in review. So December, the last month behind us, the year finished with 1,327 transactions. This represents a 3.2% increase over the same month in 2022. When you add up all the months in 2023, the total sales for last year was 26,249. That represents about a 10% decrease in volume of sales versus the same year in 2022. So a little bit slower in the total combined sales. Now, what's relevant so far into January? These stats are from January 16th, so a couple days old. But what we're seeing is, as of January 16th, there was 579 transactions, firm sales in the Vancouver Real Estate Board. When I aggregate that out at an average of 36 transactions a day, that leads us to believe that the month of January in 2024 will finish around 1,116 transactions, and that will represent a 10% sales volume increase year over year for the month of January. All right, so we're looking here at the sales summary now. We have the three different categories: the detached sales, townhome sales, and condominium sales. So we can see that we were last year quite down in December versus the 10-year average. Nearly 47% below the 10-year average. In townhome sales for December, 38% below 10-year average, and 24% below 10-year average in condo sales in December. For new listings, we were also below the 10-year average for December. For detached listings, 38% below. For townhomes, 27% below. And for condos, 14% below. The inventory levels, however, are kind of near or above the 10-year average. When we look at the median sales price, what we see is for the Greater Vancouver area, the median sales price is $1.8 million for a detached house. It is $1.181 in December for a townhome, and it is $689,000 for a condo. In the condo market, that represents a 1% increase for the month of December year over year. For the townhome, that represents an 11% increase versus the December 2022. And then the detached market, it represents a 6% increase. What we're seeing here as well is the average price per square foot. It's well illustrated here in a long-term graph. And over multiple years and quarters, you can see how the average price per square foot, where it is currently at for, again, this theoretical average price property out there. This is provincially. So as a whole, in 2023, in British Columbia, there were 73,109 units that sold. This represents a 9.2% decline from the same year, 2022, from 2022. So provincially, the sales were down 9.2% in 2023 versus 2022. What we see here is that the sales in 2023 represent the lowest level in the past decade. Probably makes you think that there's a lot of pent-up demand, right? With active listings, what we're seeing is in December, provincially, the listings were actually up. They were up year over year 15%, but they're still well below the provincial average when you look at that long-term graph. What is really clear to me working in the market day in and day out is that we are in one of the strongest balanced markets. So typically in my 15-year career, what I've noticed is that we move through balanced markets on an upswing or a downswing, and often it's the upswing. And very rarely do we stay in a balanced market for very long, but I do believe we will remain in a balanced market for the next several months, simply because the demand of buyers is growing, but there is limitations to their ability to buy, and interest rates probably will not be coming down all that quickly. So what we see here is that we're going to be operating for majority of 2024 in the balanced market area, which is it's unusual for the Vancouver real estate market to be doing that. The average price in British Columbia was in December was 965,000, which represents a 6.5% increase versus December of 22, but essentially flat since July of last year. So the latter half of 2023 was a really flat market price-wise in British Columbia. This graph or this image is showing you all the different real estate boards in BC. And what you see in the middle column is you get to see what the average price was for December in that board and what it represents year over year. So in Greater Vancouver, the average price for a unit of real estate was $1,244,000 and change, which represents a 5.4% increase in price year over year for December. And then to the right of that, you get to see again the volume of sales that happened in that board. What I covered earlier was that there was 1,345 transactions. The Vancouver Real Estate Board was up, but look at that. The Fraser Real Estate Board saw year over year for the month of December quite an increase, an 18.9% increase in sales volume versus the December of 22. What we see here is the unemployment rate nationally. So it has gone up month over month. It's still at very low, almost all-time average lows across the country. And in British Columbia, our unemployment rate is 5.6%, and that is a 0.3% increase versus the previous month. Canadian inflation rate just recently was announced, and it has risen from 3.1%, which it held at for 2 months, to 3.4%. What we're seeing is it's really hard right now to get the inflation rate below 3%, and we seem to be in a very restrictive band of 3% to 3.6%, where the inflation rate will probably hover for the next few months. This is further establishing that definitely the Bank of Canada cannot rush to lower interest rates because inflation is being stubborn and stagnant. And they're going to have to kind of balance the fact that we don't want to go into a recession and costs are very high with the fact that we can't re-stimulate the marketplace too early, because that would continue the inflation property and create a roller coaster cycle of lowering and raising interest rates, which no one wants to be doing. What we see here on this graph is the housing starts in British Columbia. And so you see the housing starts is the yellow, and then you see kind of a more calm 6-month moving average. What we see is there's a steady increase, ever since this graph is reflecting 2009 when I got into the business. But it's not dramatically increasing the way it would need to offset any of the pressures that are in the marketplace from a consumer demand side. What is further interesting, and a positive note for the Vancouver marketplace, is that the majority of those provincial new starts were in 2023 in the Vancouver area, but we're still substantially below what we need. What's also interesting is that what kind of dwellings are being built, and more dwellings that are being built are rentals. And so that is a very curious thing, where the properties that were built from 2016 to 2021, 40% of that are for rentals. And the previous period from 2011 to 2015, less than 29%, so 28.5% were built for rentals. So what we're seeing is a lot of those inventory or new build starts are not freehold, are not market properties currently right now that are starting. They're building for rental, and of course we need both. But it also really makes you aware that we are bringing less inventory into the homeowner market, because more and more of it is going to the rental market. So this is a reminder. Again, this is kind of a confusing statement by the Canadian Housing and Mortgage Group. They said in order to have a balanced market by 2030, we need an additional 3.5 million homes beyond what we're already slated on path for. Quite simply, what that's telling you is we're not going to be balanced. We are going to be in a growth cycle. The question is at what pace and how do we move forward? Simply, there's not enough people, there's not enough money to build that extra 3.5 million homes that would be required based on their numbers to have a balanced market. So we will continue to be operating in 2024 and beyond in a compressed market with a scarcity of homes and a surplus of demand. What we're seeing, other than recently, the bond trend has been downwards. With the inflation going up slightly a few days ago, the trend has changed a little bit in the other direction shortly. But in the long-term trend, the Canada 5-year bond trend is going down, which is further establishing that we won't be having any further interest rate hikes. Of course, nothing is guaranteed, and next week on January 24th is the next Bank of Canada meeting. All things, though, are really looking to the fact that we are at the peak of our interest rate highs, but we are moving lower on interest rates a lot slower than perhaps many people think. So this is a positive trend if you want interest rates to be going down. On that note, regarding interest rates, we remain flat at 5% going into January. January 24th is when the next Bank of Canada meeting is, and it's projected for most people I follow that we will remain flat at 5% and the target rate will stay there. So where are interest rates forecasted to go? Well, from some of the folks I follow, this is kind of a projection that I agree with. I think in 2024, we'll probably see interest rates going down by maybe up to 1%, starting in mid-year of this year. It might go a little bit faster, but as inflation continues to be a challenge, this is a pretty good interest rate forecast. That is going to take a couple of years to get, into the low threes. So all in all, we're projecting lower interest rates, but we're not rushing to get there. Now, another main reason why the pressure on real estate is so large is because of the net migration. It's pretty darn incredible when you look at this graph of net migration from 2006 to 2023. I mean, for a long time there, we were trending at around 200,000 net migrants, immigration to Canada. And then we've really taken off in recent years. Now, who knows what the right number is? I really question that the current rate at well over 1 million new immigrants to Canada is going to cause further challenges to our infrastructure, further challenges to our housing pressures. And so it is something that we all need to keep an eye on, because very rarely does the government make a small, methodical, calculated surgery move. As usually they're coming in with a sledgehammer, and this is really what I feel is happening now, that the doors have been thrown wide open, and this is not a strategic, calculated move. This is unfeathered and unmeasured, and we don't quite know yet how this is going to directly impact everything. But I would imagine, quite simply, it puts pressure on things that were under pressure previously. All right, so let's talk a little bit about the rental situation. So BC maintained its position as the most expensive province for apartment rents. In December of 2023, the average rent for a one-bedroom is $2,500. This represents a 1.4% increase year over year, but an 18.5% increase since 2022. This other middle area here is interesting. So less and less younger adults are owning their homes. Of course, it makes sense. The price is so high. But if you look here, in the age category between 25 to 29 years old, 44% of those folks owned real estate in 2011. By 2016, it was down to 39. By 2021, it's down to 36. What you're seeing is that we are creating a renter society simply because the prices are so high. And it's very unfortunate that It's so hard to get into the market for the young Canadians. And this, this illustrates that very vividly. I can only imagine where we will be at this rate by 2030. I would imagine that home ownership in the 25 to 29 year category will be sub 30% based on the trajectory that we're going. Of course, the severe opposite of that, you look at, the 75 to 85 area. And in fact, it's almost increased because there's more aging at home, which is, again, adding more pressure to the housing stock because more and more seniors, and they have the right and they've earned that, are finding ways of aging in place versus going perhaps to senior residence. And so that is, it's continuing the lack of that home going back into the new purchase market or back into the purchase market by young people. Anyway, very interesting in my opinion. What you see here as well is what you see is the renter growth rates. Okay, so you definitely see that Nanaimo and Kelowna and Vancouver, there's so many areas where the renter rates for the household that previously would have been owners has dramatically increased. Simply because those areas have a lot of price pressure and a scarcity of homes available, which is causing a lot of folks not to be able to afford a home that they previously might have bought, and now they're renting a similar property. To that end, home ownership rates in Canada are falling. As I mentioned, this map is showing you for the entire country. In BC, for example, in 2011, we had 70% home ownership. We're now down to 66.8%. And Canada had one of the highest home ownership rates, I think, in all of the world for a long time. And what we're seeing now is kind of that rental living market really growing because of the pressures that have been around for such a long time. Keep as well in the back of your mind that although some of those homes were told to be built when we look at the rate of new permits, new homes being launched, but in 2023, 2023 and 22, we had a lot of projects get canceled or slow down, get delayed. And at one point, a lot of home builders were almost putting 20% of their planned new developments on cancellation. And so that's going to continue to, again, offer pressure to the availability of inventory in the marketplace. So all in all, what do I see happening? I see that 2024 will be a busier year. BC and Canada's population is ever increasing, and it's at all-time highs, and we haven't figured out what the boundaries of that growth will be. The next Bank of Canada is January 24th. It's expected that it's going to be a hold. Interest rates are likely to go down in 24, probably anywhere from 0.75% to maybe 1.25%. And we find ourselves in a more balanced market with fewer sales, but with sales increasing versus last year. All in all, I foresee that 2024 will have growth. We'll see a 3 to 6% price increase, and we'll probably see about I'd say a 10 to 15% in volume of sales increase. That being said, it's a very expensive market. It's a mature market. However, it's a very stable, blue chip market, so to speak. It's kind of like buying, Microsoft or buying Apple at stable prices. You're not getting a deal, but you also are pretty confident that the future will have further highs and it's going to go continue on an upcycle. To that end, I think any folks that are buying in this marketplace before June of this year will look back and say, hey, that was the low point of this new cycle in the market. And to that end, I'd love to sit down with any of you and discuss the numbers further. Numbers are intimate and private to every person who has their different factors that influence it. So same stats, same situation has different impacts for different people. And I love the economics of the real estate market. And I'd love to be your realtor if that's something I can help you with. Have a great day.